is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're doing well this morning there in the U.S. Good old U.S. Got some visitors coming this week here to the office here in Asia. One of our good friends, Joanne out of Hong Kong's coming. I hope we can get him on the air while he's here. Started a company called Next Chains out of Hong Kong. They're using our charts on their whole platform. We wrote a Android, iOS, kind of mobile first beta run type product for them. Excuse me. And using some of our indicators. Got a great concept. It's kind of like Merriam Bloomberg light with LinkedIn. Very social media driven. Get news from everywhere on the earth and be able to communicate properly, hopefully. LinkedIn's, that site, it's a great idea that separately, LinkedIn has just been, you go there, you fill out some information, you never go back. This is for the regular user, for the professional user, it's a great database to mine. It's very expensive. It costs $25,000 to usually start anything with LinkedIn from a kind of a pro level. But he's got a great idea. We've done a lot of work with him over the last year. And is using some of our HTML charts in the product itself. So looking forward to doing an interview with him when he gets here. He's ran JP Morgan's Asia trading desk out of Hong Kong, and his wife works for Blackstone. So he's kind of stopped all the working for somebody else and started this concept. Saw a need for it, and I admire people that go down those roads. So we're going to look at the Shanghai, talking about flavors of Asia over here. This was one wild ride today. It ended up being up about 2.5%. But look at the action today. I mean, the range, it's been a harrowing experience lately. But again, we're still staying above profiles here on the long term. This is our daily on the Shanghai. Excuse me, guys. And as we look at this on the weekly, we couldn't pull up our Shanghai charts the other day, and we were trying to look at the long term. I guess there was so much activity, it might have broken some things at eSignal, but we had the big orange bar up here, then the new profile up here, and the unfair lows on the weekly, 42.06, bottom of the box there, and 42.88, bottom of the box on the daily. So it got right into that little DMZ down there and didn't want to be there. That's very, very positive for the Shanghai. And basically it's kind of completing not the entire cycle or the entire fair auction of the weekly profile, but getting very, very close. And in that neighborhood, we always talk about you have to give yourself a little bit of room, a little bit of noise factor around some of these longer term inflection points. So now the near term targets are going to be 47, 46 on the Shanghai. But this product may deserve to rattle around here a little bit and stay within the balanced area on the long term. So we're going to keep our eye on that. But remember, the inflection points to pay attention to on the Shanghai, just to restate those, 42.06, 47, 46. I'm going to pull up our scanner really quick, which I just sincerely hope Tommy and Mike and Ken and Pia from my side and a host of others will be able to get this coordinated hopefully today so you guys can access this. I gave Steve Rhodes a copy of this today, and we'll see what he thinks about it. But going into our indices heat map and looking at the Shanghai, you can see we've turned negative. We started turning negative yesterday or the day before on this. Weekly, long-term still positive, and that means that we're supposed to be looking on a long-term basis. If you look at all these negatives here, these were different time frames. On a long-term basis, we're supposed to be still looking to buy inflection points on pullbacks on the long term based on what we're looking at here. If we go into our futures section, this is where we only got one product here. It's not a future, the Shanghai, because we don't have a future on it. But we're going to take a look at the inflection points here we just spoke of.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Are we back? Al? We live? Okay, great. Apologize, guys. We had some, we're in a new building here. The power went down 3 times. All of a sudden, the engineers are testing something. That's the way it goes here right now. I apologize. Tell you what, I think where we left off, was the Shanghai. We were kind of summing this up, and we were talking about the scanner and the breadth, and long-term breadth being positive. Still need to look to buy major inflection points as they are approached, and we use the breadth situation to really kind of pin down, maybe blocking out one side of the marketplace. I'm going to go right into the S&Ps. I think my clock is off here. Oh my goodness, can't tell if we're going to break or not going to break. As we look at the S&Ps, we had looked at the breadth situation on our scanner, and we're going to pull that up. Al, can you? My clock is down. Can you tell me if we've gotten? Are we on the 5-minute segment now? I just want to be able to kind of gauge what we're doing here. Yeah. Okay. Great. Okay. I think I know where we're at. All right. So, as we were looking at the S&Ps and we were looking at the heat map grid on the scanner, this is kind of the way we've been kind of trying to regulate this trade. I want to try to make some sense out of it now. Going to our daily, we talked a lot about the leverage of the weeklies having a crossover point on October 24, 2014, and then I believe we had that crossover sub June 5th. We were kind of waiting patiently. Intra-week here, we've turned around and gone positive. Now that, doesn't bode well for shorts. I'll admit that. We kind of rallied past, got back above some major inflection points here. And we talked about this yesterday and the day before, actually. Getting back above these inflection points, having to kind of wait and see now. 2102, 2103 rounded off. We were sitting here around 2104 on the 240s. We talked about waiting maybe until we crossed those borders down below, and also being able to peek at our scanner and kind of look at the breadth updates. We're looking relatively positive here now, guys, on the intermediate, the short term, and the weekly crossing back over to positive. That's not exactly what I wanted to see either. We were passing on buying the dips. Now, just to review here, we had talked about, using this 2066, 2060 area, the DMZ down here, as targets for shorts, and passing on buying those inflection points. And we talked about passing on buying those inflection points because of this breadth situation. And this breadth situation really kind of lets you know when there's a disconnect in the marketplace of the internals. We talked about that a lot. We've got some decent videos on the site about that. Hopefully, you guys will have access to this much more beefier version of the scanner that's going to replace the web version that you guys probably have access to now. But as we looked at this yesterday and said, you know what, we're still kind of migrating up here. We're looking a little launch paddish now. We would have to have gotten back down below 2104, 2103 to start looking at it from the short side. Right now, I'm just passing on this. And it's okay to not be in the market all the time. And here's our weekly situation, just looking like now, I hate to say this, I mean, they're just, the Greek situation, which is imminently going to have a decision, I guess, within the next 48 hours is, people are going to be cheering and, if they come to some agreement, and to be honest with you, I don't even know if it's a bad thing if they kick Greece out of the European Union. So I don't know if there's a lot of downside to that. Either way, we've been talking about that for a long time. Really the only thing that seemingly to me with a Greece possible exit would be, who's next in line. I think that would, is it Spain? Is it Italy? Is it, Bulgaria? I don't know the latest EU members that they probably shouldn't have admitted, but that would be the only thing that would, in my mind, would be a little concerning, is they'd start looking to the next candidate for that situation, and who are they going to pick on next. Guys, we're going to go to our break here. I'm assuming. No, next break. No. Okay. All right. My clock is off, and I apologize, Al. Gotcha. We're going to look at a couple of other indices right now that are U.S. related. I'm going to go into the NASDAQ September contract. And if you're looking for a summary on what I just said on the S&Ps, I'm not a big fan at all of shorting this right now. We were looking. I'm going to go back to the S&Ps. I don't think I really finished kind of a summary statement on this. We were looking at trying to sell resistance, which the most recent, most powerful resistance area, 2103, 2104. That didn't work out. Had a lot of volatility around it, and seemingly have just kind of ignored that area and started drifting higher. That's the area. That's the point of contention area. The other point of contention area is down here around 2066, 2060, 2062. So right now, to me, even though the breadth is starting to turn positive, short-term traders are going to be able to access these inflection points, 2119, breakouts above there on the long side. I'm not exactly excited about shorting an inflection point, even on a short-term basis, that I don't have a lot of help with our breadth right now. I'd like to see this thing start breaking down and start seeing some breadth numbers change. So that's the summary statement on the S&P. Let's go into the NASDAQ really quick. Okay, so kind of a similar looking chart here to our S&Ps. It's just almost identical, actually, when it comes to looking at profiles and price action here. 4503, a little bit stronger situation. The S&Ps on a relative scale, it seems like we've kind of made all-time highs again here. Let's go to our weekly. Again, nothing to really short in my mind. Here's the short-term numbers on the NASDAQ. Any breakdowns below 4524, with some coincidence of our NASDAQ breadth trying to change. Now, as you'll notice, and I've got a weekly rank. Let's go to our weekly ranking here. NASDAQ and S&Ps are green. I mean, some of these things are starting to turn, but remember, the NASDAQ really hadn't showed the weakness even on the weekly breadth. So right now, again, a little bit different situation, a little bit better situation in my mind. If you put a gun to my head and force me to go long, I'd more than likely want to pick the NASDAQ here, but stops have to be below 45.24 on this trade, and there are some possible short opportunities below 45.24, but you, again, want to see some breadth changes that might be giving you some help, at least on the 240s here. We've done a lot of studies on these, breadth crossovers, if you will, from negative to positive and positive to negative, always staying in the market for years, and they're a great little system in itself. And if you add the profiles of the index itself into that strategy, then you've even got almost an exponentially better system. So we kind of are looking back in history and not curve fitting anything and just trying to play the probabilities as always, and always putting the stops in, just like we spoke about yesterday. 10-year, S&Ps go up, 10 years going to rattle around here, not exactly selling off huge. 125.24, we talked about that as support for this product. We're starting to get into an area where it's now almost a value to stop out on the long side. We try to take our lumps in small increments and try to let our profits ride. And this is one where, we may be looking at a stop out here on buying support on the 10-year after we had kind of ramped up, rattled around above there, and now we're just drifting below. That's the way the ball bounces when it comes to trading, and we're just going to have to take our medicine on the 10-year right now. So that's the way the September contract looks. We're going to take a look at gold. This is one, we talked about our automated systems were short this, and we've been short right below 1196. We just took some profits at 1180. I don't necessarily know if this is even going to stop at 1170. We're trading 1179 right now. So again, this is something that, with the Greece news and, didn't exactly show any signs of strength when there was a little bit of a tenuous situation and kind of a Mexican standoff there, if you will. Or a Greek standoff, if you will. Gold may just completely get back down below some major inflection points, namely 1170, and on the weekly, we may see that 1150 area. So I'm getting a little bit more bearish on gold right now. We're flat now. We took some profits at 1180 on the automated system, so we're just sitting tight here, hoping we can get into a little more inflection point situation we can look at and trade again also on the 240s. So I think we're going to go to break here. I'm going to reset my clock here pretty soon. Hopefully get on the same page as TFNN. Guys, I think that we're going to break right now, and we're going to be right back, and we're going to get into a couple of stock picks right off the scanner, see what's holding up and not looking that bad as the long candidate. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning, you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Thanks for bearing with us today. You know, and some of you may be going, well, what an idiot. He doesn't even have a UPS backup system. That's a great question, or that's a statement on that topic. But maybe I'll answer that a little differently than maybe you've heard before. There's some things going on here in this bill that they've got rigged to make it a massive UPS system on top. That's what the Cyber Center is for. But we actually have, believe it or not, one of the coolest things that we've had in our other office that we're now going to hook up because we do not trust what they're telling us in the building. It's the coolest UPS system I've ever seen. You hook up a 21 plate back truck battery to it, and I promise you, it is the most amazing UPS system you've ever seen. It was not that expensive, but it'll keep like 10 computers, the internet lines, and everything up for about 6 hours on this little system. And I was blown away by the ingenuity of some guys around here that set it up for us. But we'll have it hooked up tomorrow, trust me. All right. We were talking about gold a little bit before the break, and we were discussing how I kind of turned a little bearish on gold. You know, this little Greek event, in my opinion, fundamentally had it show its hand to some degree, and I've been a little non-directional on gold, and I think now gold actually could start showing some general weakness, and I've talked about 1150. I'm going to stick by that, but the initial targets for a lot of this are initial pullbacks are 1170. I don't know if we're going to stop there, except possibly a little bit of a sympathetic bounce, if you want to call it that. We're going to take a look at the euro. This is kind of buy the news, sell the fact. Talked about this one. Here's the euro. This has been one interesting that we use our 240s to regulate the trade up. I just want you guys to watch how this works. We started having a breakdown, some closes below on our 240, 113.20, but I had specifically talked about waiting for some daily confirmations, waiting until we started getting price action and preferably even closes below 112.25. That seemingly is happening now. I love the way this is acting. I still think the euro US dollar could be at par with each other. So again, that's kind of my thoughts on the euro. Now I'm looking at putting stops above 112.25 again on this particular trade. And this is really, really neat how this is working out for this right now. Still looking at downside targets of 108.70 on the euro. And we're also going to just kind of remember the 240s are going to regulate this trade down. We're going to pull up our scanner, and we're going to kind of go to our Forex situation, and all of this information is just painting it for you. All these inflection points, the new boxes attempting to appear in new supply and demand areas. Let's just take a look at the euro right now. Here we go. And as you can see, started breaking down third 240-minute bar below that 240-minute profile. There's the inflection points. There's that 113.20 I just spoke of, as you can see right there. Okay, I was just getting a little bit of information from my guys in the tech department. Here we go. Also, we're going to take a look at the USD JPY. As you can see, some green there. We want to reference that. This is, as you know, if you've been watching the show, it's been one of my favorite trades. Dollar rallying a little bit here, rallying a lot, helping the carry trade JPY USD. 123.29. We talked about having to get back above this, close above that border, which we did yesterday. Had a close at 123.35, and then we've kind of looked at that as a little bit of a retest area to move higher. I still fully believe that the yen, and with all the crazy things going on, the yen hasn't really had a tremendous amount of volatility, as high as the price is on this, and as volatile as this thing probably should get. Has acted relatively well. Again, targets up top 124.61, stops below 123.29 now on the yen. Going to take a look at the good old US dollar here really quick. Talked about this having to get it back above 95.30. Also at the same time, yesterday we had this orange bar happening, new profile, output. After that, that's exactly the chain of events that happens with this particular look. And on the scanner, when you go into this, that this is the same situation. You look at the USD CHF, it's got the yellow peel back happening. That means a new profile is attempting to appear. That's exactly what the situation was on the dollar. So similar situation, nice little indicator. What's the targets right now? 95.75 is going to be something that's going to be our targets. That's what it's going to reach for, and that's going to be somewhat of a short-term resistance area. This is our daily. So if you kind of caught a little bit of a bounce on the dollar, then that might be an area you need to start taking a hard look at. But a weekly close above 95.30 is going to be very, very bullish for this particular instrument. All right, we're going to look at the ruble. This is something, Eddie's kind of been genuinely following on a day-to-day basis. Again, stops below 53.12. I like this particular trade, and I like it powering up through 55 and even higher. The good news is on this particular trade, stops below 53.12 based on your appetite for risk. Really like this trade. I'm going to go into a couple of looks at some new crop soybeans. Talked yesterday, in fact, and the day before, about not wanting to get involved with this on the short side right now. Last time we looked at it was 913. Nothing to hang on to here. Nothing to talked about this compression action, building cars, as Tom would say, around 940. We had nothing to really key off of there. Looked at the weekly, wasn't a very impressive situation. And next stop up on beans could be 983. This is again what stops are for, guys. I had personally been talking about maybe beans at 850 ultimately, and that still may happen. But right now you've got kind of a runaway freight train above this profile that we're letting it regulate on the daily, and obviously getting above that weekly unfair low. That is not immediate good signs for the shorts on November beans. And if you've ever traded grains, if you've never traded grains, those things can go a long ways in one direction. So, and you got the limit up, limit down situation possibility. So make sure you put the stops in when you can. All right, we're going to take a look at crude oil really quick. We're going to come back to crude oil, and let me see if my ETFs are looking halfway decent right now. We've had a problem with the ETF charts here. Okay. XLF, again, the spread on the treasuries, this is kind of what banks make their money off of. If you ever go, we had a pretty big clearing deal at ABN AMRO at one point when I was in Chicago, and they as an introducing broker or a proprietary trading firm, using their company that they own called Sage, which is what they did all their risk-based haircut clearing out of. They would let you beat them to death on the transaction rates. But if you got into even hinting around that you were going to try to whittle them down on their spreads, their debit credit spreads, they'd tear up your clearing arrangement and tell you to go down LaSalle Street. That is how they make their money. The transactions is nice. It basically pays everybody's salary, and there's a lot of overhead run those operations. But that debit credit spread is their meat and potatoes, and that's like their lockbox. They're not letting anybody into it. So these banks, it's the same situation. When rates go up, yield curve widens a little bit. I mean, if you can call it widening right now, and these financials really rely on that. So that's one of the fundamental reasons why some of these XLF stocks have been climbing. Market in general obviously has not been hindering that. Let's get a couple updates here on the S&Ps. If you joined us late, S&Ps, we're looking at our breath for some guidance here. Not more than likely the time to start looking at this from the short side. We got to get back down below 2103, 2104 to start singing that tune again. Okay. A couple of stocks on the radar here I wanted to pull up. A couple of emails about this one. Again, I'm not a big fan of this company in general. Technically speaking, we are and have some inflection points here. I mean, it's nice to see this. We were below this 167.35 area, coupled with those daily unfair lows. We're kind of sympathetically just gradually rising here with the market doing what it's doing. I still love this from the short side, below 167.35 down into 166.65. So any closes below that level, I'm still going to be looking at as a short, and I'm also going to be looking at stops above. Slide to my left. Okay. Sorry, Al. Okay. So IBM, that's the take on IBM. We're going to look at Amazon really quick. Let's get a ton of emails about Amazon for some reason. And seems like I could spend every show going over a little bit of it. But, the fact of the matter is on this, and I'll just restate it. We've talked about this a couple times. Profile appearing below is very bullish. There's a lot of shorts in this stock right now. Every time we get into these inflection points, 425 and breakouts above 436, market obviously helping this right now. This thing could go again. Make sure you put your stops in, though. All-time stops have to be in below 425. Market could drag this thing up to do a power move, actually, so be aware of that if you're tinkering around with this on the short side. Going to go into a healthcare or a drug stock, basically. Gilead. This is one of Eric's favorite companies. If you watch Eric on the show, we had some had some people emailing. I mean, this is one where you buy the dip, you buy the breakout, you don't short it. One of his favorite stocks. He's been a big fan of this. Has been very right on this stock. Here's the weekly, and somebody was asking me, has this gotten too high? My answer to that always is let's let the 240s get you out of the trade. So getting you out of the trade right now would be taking any pullbacks down into 118.27 as a long-term investor as just kind of par for the course noise. You've also got something just glaringly in your face here. This is a strong stock in a market that's started to show some strength and is really showing its hand again. And this is our 240-minute view as a stock to not be on your short list. So as we look at a lot of these stocks, we always go, and here's I thought the electricity was going out again. I was getting ready to let's go through the roof here. We always try to look at stocks that are showing their hand. This one obviously was one that was showing its hand on the strong side in a market where we were looking at a breadth rollover on June 5th for the first time since October 24. So it's a really good primer on staying away from trouble. Now, on the other hand, we're going to look at a stock like Walmart. This has kind of been one I've been extremely happy to say that it's still on the short list. But there's one thing going on with Walmart right now. We've got an orange bar attempting to appear on the weekly. That means that we might have a new profile by the end of the week showing up Monday morning next week. Be aware of that. That may cause us to kind of, maybe be in a trading range for a while, maybe rally just a tad. But we'll have a new profile on this on a long term, more than likely. The good news is this daily has just regulated this thing down. We've looked at this stock 15 ways to Sunday to try to find, all the reasons in the world to stay on the short side, and I'm still feeling some pretty deep convictions about it. And I love the way the market has rallied, and this thing just can't get out of its way. We're going to be back in 5 minutes, guys, and talk about a couple things before the market opens here.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're looking at a couple of stocks, Walmart in particular, ones that had kind of shown their hand and could possibly weather some storms if the market was going to rally. And it's exactly the type of scenario we want to see. I think it's good to see proof of concept when we try to find things that are not cooperating on the upside, and when the market rallies like it has, that some of these stocks just can't continue to still get out of their way. We're going to look at a couple of ones also still in the scanner. We're going to look at some stocks that are, and we've got some breadth statistics that are starting to look a little more positive on the intermediate. I'm still not so convinced this week the weeklies are going to stay positive, but it's starting to look that way. Some of the ones that are still on the list here: Lowe's Corp, L. This is one we were talking about last 2 weeks. Legg Mason, Pitney Bowes. This one seemingly is just the eternal short. So let's take a look at Lowe's Corp, L, and PBI. Let's take a look at that really, really quick. All right, so nice little situation. Retested that 40.73, still headed south here. Pitney Bowes. Here's a daily situation. Very nice 39.72 into 40.73, kind of that DMZ stops above, and market lifting a little bit here, and this thing is just still looking extremely sick. I'm sorry, this is Lowe's Corp, not Pitney Bowes. PBI, Pitney Bowes. Another stock, again, I think stocks could be ordering above 22.25. Not the darling of the stock world right now, showing it very evident. Let's find some other things that were Hershey Foods. That was one we were looking at last week, HSY. Let's take a look at this one. Waiting for this to update. Here's the weekly situation on Hershey. Really has come off and retested those 92.32 area. We talked about this last week, stops above, and the week before, excuse me, and have really started coming down here now. Stops above on the long term on Hershey, 91.73 into 92.32. So you got about 50-cent DMZ. You can put stops above on this. Again, if market starts hints of turning south, the theory is a lot of these stocks would fall faster than the ones that are showing strength in this type of a move up by the S&Ps. Legg Mason, again, LM, something else we've had on the radar screen. Kind of rally back up into weekly and daily unfair lows. Really like this one, stops above 53.65 based on your appetite for risk. Going back to the scanner. There's that Walmart down there. There's Waste Management. It's another one we've been picking on. Schlumberger's on the list. Oracle. So let's take a look at Waste Management, WM. Very ripe opportunity going back and kissing these 40 and 70s. Now looking even weaker, sitting on the lows of the year. Guys, you've been great. Stay tuned. Steve Rhodes. Larry Pezzavento is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.